Hi everyone, so today I want to explore and share one of the most exciting frontiers in AI agents. We've all seen what ChatGPT and DeepSeek can do, but those are still fundamentally chatbots. They answer questions, but they don't take action. Agents are different. They represent the next platform shift in computing, from simply responding to actively orchestrating. And in this video, I'll tackle 3 key questions. Firstly, what is an AI agent? Second, why is their potential so massive? And lastly, which companies are best positioned to lead? Think of this as both a technology story and an investment story, because the winners of this shift are likely to shape the next decade of value creation. So firstly, what are AI agents? AI agents are systems that can reason, plan, and act to achieve goals across multiple steps. This is very different from large language models like ChatGPT or DeepSeek. LLMs mostly provide single-turn answers. AI agents can decompose a task, call tools or APIs, and adjust based on feedback. And here's a very simple way to think about it. ChatGPT can tell you the best restaurant nearby, but an AI agent can book the table, put it in your calendar, hail you a ride, and reorder if the restaurant is full. The leap is from information to execution. And this is why AI agents are such a powerful opportunity. But we don't get AI agents automatically after building a model like ChatGPT. 4 conditions need to mature before agents can scale. First is reasoning models, the ability to break goals into steps and adapt to changes. Without reasoning, agents are just chatbots with memory. Second is compute power. Running multi-step reasoning is expensive. Agents require enormous compute to operate reliably at scale. Third is tool ecosystems and APIs. Agents are only as useful as the apps they can call. Rich integrations across payments, logistics, and enterprise software unlock real value. And lastly is memory and planning frameworks. Agents must remember what they've done and anticipate what's next. Otherwise, they'll repeat mistakes. And when all 4 of these conditions align, agents move from prototypes to production. And we're already seeing early use cases. For example, in law, Thomson Reuters built a due diligence agent that cuts workload by 50%. In consulting, McKinsey used agents to accelerate delivery, 90% faster project turnaround, and 30% less admin work. In retail, predictive sale agents improved inventory turnaround by 30%. And the theme here is consistent: reduce costs and increase efficiency. These first applications are about operational leverage, doing more with less. And beyond those first examples, the scope is massive. You have applications in transportation, gaming, finance, healthcare, smart homes, retail, media, and manufacturing. But this list is not exhaustive. So in terms of market sizing, market forecasts show exponential growth as we transition from chatbots to agents. And the opportunity spans 3 levels. Infrastructure, which are chips and cloud compute, the picks and shovels of this wave. Second is orchestration platforms, basically frameworks that enable agent planning. And lastly is vertical solutions, which are specialized agents for finance, law, healthcare, and more. And history shows that value accrues across the stack, from hardware to platforms to applications. Agents will be no different. So, who wins? 4 conditions are vital for this. Firstly is strong proprietary models, which is the control of the engine. Second is large application ecosystems, which is a rich playground for agents. Third is massive user bases, which can lead to distribution at near zero cost. And lastly is the high stickiness, which is apps people can't live without. And companies that check all 4 of these boxes have the deepest moats and the highest chance of dominating the agent era. Now let's explore 2 companies, one in the US and the other in China. So let's start with Google. Gemini is one of the most advanced model families globally, and Google has articulated a clear agent vision through its 3P strategy: agents that are personal, proactive, and powerful. This is visible in Gemini Live, conversational in real time, able to interpret images, translate languages, identify objects, and execute cross-app tasks like retrieving emails or even guiding you through bike repair. Then there's Project Mariner, a multitask automation agent built on Gemini 2.0, able to juggle over 10 tasks at once: property searches, price comparisons, placing orders, all inside Chrome and Search, controlled conversationally. And we combine all this with the numbers we see from 2025 Q2. Over 2 billion monthly users of AI overviews, 450 million on a Gemini app, and 32% cloud growth. And Google clearly meets the 4 winning conditions: strong models, vast ecosystems, billions of sticky users, and the resources to keep pushing. Now let's look at Google's price action. In the graph, we just see it's gapped up after the antitrust case win. And now it's really just about waiting for it to return to the 10-day moving average. I get that some people may feel that they need to chase here, but what we want to do is look for an entry point with low risk. As Buffett says, the first rule of investing is don't lose money, and the second rule is never forget rule 1. So what we want to do here is just wait for a return to the 10-day moving average and see if it can act as a support for the price action. So next, I want to look at Tencent, because on the China side, Tencent is the parallel to Google. Its Turbo S and T1 models rank highly in reasoning and coding benchmarks, and Tencent pursues a dual strategy, continuing its in-house research and development while collaborating with DeepSeek. At scale, it's unmatched, 1.41 billion monthly active users on WeChat, making it the gateway to digital life in China. And the ecosystem is comprehensive. Payments, mini programs, video accounts, gaming, and cloud. This means agents in Tencent's ecosystem can act, not just answer. And the commercial traction is visible. Ad revenue increased over 20% year over year. Fintech and business services increased 10% year over year on GPU rentals and API usage. Tencent checks every box of the framework. Strong models, powerful ecosystems, massive user base, and extremely high stickiness. Its moat is daily life integration, making agents part of how 1.4 billion people communicate, shop, and pay every single day. And Tencent's data shows it has the same 4 ingredients as Google, but in Asian context, with near monopoly reach inside of China. Now looking at the price action. Tencent's actually one stock that I've been adding consistently to my portfolio over the last few months. So now the question is probably, when can you add? So it's recently broken out of its previous high. So for me, I want to see if it can hold above, but honestly, any pullbacks to either the 10-day moving average or this bright yellow trend line that we have drawn is a good entry point or price to add to your portfolio if you're already in the name. Tencent has consistently been making higher lows on its way up, so the trend does look good here. So to wrap up, AI agents are the shift from answering to acting. They require reasoning, compute, tools, and memory, and they're already driving value across industries. Or winners will be those with strong models, vast ecosystems, sticky apps, and billions of users. Google and Tencent exemplify these conditions on opposite sides of the world. To be honest, we're still early in this process, and that's exactly why this is time to pay attention. Thank you.
If you like this video, like and subscribe. Join our investment community on WhatsApp, which is free for now, through either this QR code, or we also link it in the description box down below. Feel free to comment if there is any topic that you want to hear about, any particular technical analysis that you want us to walk through. See you in our next video.